What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Hot off the press, little PPI coming in higher than expected. So that's 2 consistent prints of higher inflation for the U.S. Here is PPI this morning. Year over year forecasted for 4.9. Previous was revised up, I believe, 4% up to 4.3. Forecasted 4.9, which is a pretty big jump for year over year. PPI came in 6%. Yikes. Month over month higher and revised up. So 0.5 to 0.7. Forecasted 0.5 came in 1.4. Crazy, man. So year over year core revised up 3.8 to 4. Forecasted 4.3 came in 5.2. High flying. Now, that doesn't necessarily mean that the market's going to take this negatively. It was a negative reaction at first. We were trading around 74.16 SPX 500, dropped down to 7,400. I'm interested to see where the day goes. I'll put a key level out there. I think that if we stay above 73.80 on the day, the market's going to be still resilient. It does make me want to try to just sell some bear call spreads, but I just see there's a huge level up here at 74.45, 74.50 that I think price could honestly like disappoint every trader thinking like this is a down day, this is going to be a red day. Look, yesterday wasn't a red day, right? I mean, we technically finished red by 0.16%, but we went 50 plus points to the downside to ultimately settle just a couple points away from where we opened. I mean, we gapped lower and we actually closed above that gap. So this morning, we're going to be gapping lower again slightly, unless things jockey around here in the next hour or so before we have opening bell. But let's see. I think as long as price stays above 73.80 today, this market's going to maintain its resiliency. This was our low from yesterday, around 73.38 was our low yesterday. So we have, I mean, it could be this. We have highs around 74.30. Tested that again overnight. So is it possible that today the market is using resistance? We have some support. We have some support over here. Is it just going to be a range trade, right? Is it possible that we have some downside pressure today? Maybe. So I want to watch the price action, right? But if we are above 7,400, I'm going to give the market the benefit of the doubt and see, is it possible that we stay above 74 and try to grind higher? If we get below 74, I mean, target for me is 73.80. If we break 73.80, we've got 73.50 and possibly the same lows as yesterday in the cards. The market today is only expected to see about a 33-point move. So we're talking about levels that are, 50 points lower, 50 points higher. I mean, as far as open to close, this is what the markets are expecting. Is relatively contained. I think that's contained for major inflation news. Only going plus minus 33 points is pretty contained. So it could just be noise. What else do we have going on in the background? We have President Trump just arrived in China. I think he and President Xi have some headlines to make this week. So Thursday, Friday, whatever it looks like. Oil prices, everything else. I've got an earnings trade on Alibaba that they had earnings this morning. Looks like they missed. I'm going to see if this will, possibly come back to my pin prices around 135 on one of the trades I took for Alibaba for earnings. If we go to SPX I mean, what I'm not loving about the current charts technically is that we have overbought conditions with divergence on a daily time frame. If we look at the weekly chart, we also have 7 weeks in a row that have been straight bullish. 1, 2, 3, 4, 5, 6. I mean, this is an indecision week for number 7, but it's still a green candle. So if we maintain green this week, that's 7 candles in a row to the upside. So we'll see, right? Take a look at the Nasdaq. Here's NDX. NDX 1, 2, 3, 4, 5, 6. Nasdaq turned a little bit red. Okay. Look at the daily chart. You know, this win streak on Nasdaq has been incredibly impressive. Yesterday, even semiconductors looked the exact same. They were down early in the day, fought back. Okay. I'm curious how today behaves. Pre-market cues up actually. So Nasdaq is up pre-market. SPY is down pre-market. Dow, which still is not up at the highs, not yet. Dow is also down a couple dollars pre-market. Russell is also down about $1 pre-market. VIX still elevated, still hanging out around 18. Not a low VIX, not even close. The lowest we've had this year is around 16. 1807. This could be, you know, kind of maxing out 1807. This is just a spot check on VIX, but maybe a 1.13% move on the day. Those are extreme days, but that's kind of where I could see the markets going today is maybe pushing like 60, 70 points if we get beyond that expected move. Okay, let's take a look at some other stuff here. Oil, gold, silver, dollar. Let's look at some currencies. Here's currency strength. We're getting a nudge to the upside on the dollar this morning. Aussie's on top as well as CAD. Dollar's also up there. Japanese yen and Swiss baseline right in the middle. Weakest currency pair today is New Zealand. So does that mean my Aussie New Zealand is still... I bought in the Aussie New Zealand, and there it is. I mean, I looked at a nice little rising wedge that still hasn't broken structure. So we tested this level, but we haven't broken this low, which is my chart alarm. This might still just be, you know, working over before it rolls over. I want this to pull back. I'm not shorting Aussie New Zealand. I want this to roll over so I can buy more. Because I'm after this trade to go to symmetry. This symmetry to me is minimum targets 2,700. I think that if I'm a little bit more precise with my low and high, so I take this exact low, and I'll just do it again. I'll draw another box. So I'll take this exact low right here to this exact high. So if this is a breakout trade, I'm just going to copy this move, paste it on top, and it should be slightly higher than the box I already have drawn. And that gets us up to about 2,800. So as I said in the alert that I sent out for Aussie New Zealand is I am long and I'm willing to kind of dollar cost average into these longs. I don't know if we pull back, fine. We pull back anywhere between now down to about 1,600 or 1,500. I'm still going to stay long in Aussie New Zealand, ultimately trying to get to 2,700 or higher. So if we don't pull back and all we do is go sideways up again, sideways up again, sideways up again, we hit symmetry. I'm taking profit at symmetry, and I'll start to look to short this thing probably between 27, 2,800 and play this back down. So, I mean, I'd shorted it probably 20. I'd take profit number one, and then between 27, 28 and 1.30, I'm probably looking at short. This has been, I mean, this is one of the more stubborn trends I've seen in the Aussie New Zealand in a long time. So I'm going to ride it for right now, but we'll see what happens. Take a look at dollar index, still range bound. I don't know if anybody's looking at this as a clear picture on the dollar. Still looks like an interesting setup. I think everyone wants to get short the dollar. I don't think that's the trade. I think the stronger trade, and this is probably the more less crowded trade, that would be we break above 101 and we actually move up to 104 or 105. But right now, I'd prefer to get that trade by buying it extremely low. So if I could buy the dollar down here, or at least position myself on dollar crosses, looking for dollar strength around this like 97 to 96 handle, I think that is a low risk, high reward opportunity. And the crazy part is this could get even larger for a breakout move. But even if you traded low risk down here for a higher reward up here, I think that's a good setup on dollar crosses. Okay, if you look at the DXY, it's mainly trading the euro dollar inverted, right? So across the board, if I traded every dollar pair, especially dollar yen, it's not going to correlate with this. You know, this is going to be mainly the euro dollar, and then you sprinkle in your peripheral pairs. You put in pound dollar, Aussie dollar, New Zealand dollar, maybe dollar CAD. If we get dollar strength across the board, that will pop up. I still think dollar yen is just in its own little island. So did it break structure? No. Even though we had talks of Japanese yen intervention, We came right down to test support. Markets bought it so far at the 150, 155.50 handle. It's up a couple hundred pips off those lows. You know, we're still watching that 162 level, right? Here's 161 and change, 162. Is that really the key level? Is that the line in the sand for the Bank of Japan? Look, if the Bank of Japan is going to unwind the carry trade this year, I guess we'll find out. Because what's going to have to happen? Well, that looks like a rising wedge. It's going to get on the right-hand side of the wedge, take out these lows, and yeah, it can fall. But I'm just, for myself as a trader, I can't anticipate a move like that, because all it takes is everyone's stop loss to be up here, and this market goes up through all of that by hundreds of pips and then ends up coming all the way back down. And there's the trade that I actually want. But as I said before, Nick and I talked about this. If this trade happens to the downside, that is a major, major risk off signal in the market. And if we have risk off in currencies, that means we're likely going to see risk off in the Nikkei. We'll likely see risk off in the U.S. markets as well. And you know, everyone's talking about, oh, this next big drawdown. I mean, yeah, the markets could have another drawdown. I think the markets are going to try to finish higher. You know, they're going to try. They're going to try to grind higher. But we could have, you know, similar to 2024, we had some pullbacks. We had a 5% pullback in April. We had a 10% pullback in July and August. We had a 6 or 7% pullback in December. I mean, that's a lot of volatility to have meaningful pullbacks throughout the year. We've already had a 10% correction this year, right? 10% roughly on S&P, 13% on Nasdaq. Those are good pullbacks. Do we get another one? Maybe 5 to 10%, probably, could be. So keep an eye on it. All right. So that's our index. Let's go oil. Oil is back above $100. Does it mean anything? Not really. I think this is the noisy spot. How many of you are trading like short-term oil? Whether you're trading CFDs, trading futures, how many of you are grinding out some oil trades? I mean, if you are, great. I hope you're following at least some context of, okay, give me an alignment, give me shorter time frames, give me some precision, and go in and scalp. It's volatile. It's tradable. But as far as the big picture goes, I mean, honestly, part of me wants to just short oil. Not now. But at 120, I might look at shorting oil. If we break above it, I think that's the shock that everyone starts chasing longs. I'm not going to short it on the chase. I'm going to short it if it gets up to like 140, 150. I'll short oil like crazy. That'll be a fantastic short. I probably have to give myself 6 months for that trade, maybe 12 months for that trade, but I think that'd be an excellent trade. But it might come with like the bigger shock first, right? So anyway, we'll see. Otherwise, if we're not above 120 and we're not below 80, I think all you're doing is you're just trading a high volatility range where this is just gonna bounce back and forth. This is ping pong, right? Is it Iran and U.S. that affect oil prices? Yeah, it's just noise. Everything in Iran and U.S. is brinksmanship. It's noise. I think the market doesn't care. If the market cared, we wouldn't be at all-time highs. It's that simple. I think the rest is, if you're focused on that, trying to trade that stuff, it's noise. Oil's volatile. It's tradable if you like to scalp it. I think that's pretty simple. All right, a couple of the currency pairs I'll get to in a moment. Gold. I put it so if you are in the Pulver Alerts, I sent out a trade yesterday. So gold is at 46.82. I still like the idea of scaling into gold. I have some GLD positions. I'll start looking to build out some option trades on gold futures, but not yet. Okay, I think silver actually looks technically. Silver looks more attractive to me for some reason. Well, I mean, it's technical, but if we are going to hold this low, okay, and we're making maybe the run of like higher highs and higher lows, I'd like to see another, pull back to higher high and break this structure and see if this is going to be a channel that runs all the way back up to these highs. Now, this might be premature, but the trade that I put on yesterday in the Pulver Alerts is I went pretty deep. I went deep in the money on my SLV position, and I bought a $40 call. So I'm way down here buying the $40 call. It did cost, it was like 40 some dollars to buy it, but I sold the $80 call against it. And so this one is I'll just type it up here. It's like a January 2028 expiration. And this is a June 2026 expiration. So it's an income trade. If price is above 80, then I'm going to turn this trade into like $600 a contract, because I think I paid $34.50. So it'd be like $550 per contract. And if price is above 80, and I'll repeat this, I'm gonna keep grinding through this stuff, thinking that if we're gonna start an uptrend or get an uptrend, then I'll get some income trades in silver. If it pulls back against me, then this one just expires for profit, and I sell another covered call for July or August. And so this strategy, I'm out longer on the January call. In a way, it's kind of like the poor man's covered call. Even though this is like a leap, I'm just selling against it. So you can, use it that way where I'm paying for an option that's way cheaper than buying the underlying shares, but I'm going out long enough in time that I'm trying to take, as much of the time decay out of it and just say, do I think by 2028, by January 2028, do I think that silver is going to be higher? I think we have a chance to see all-time highs before January 2028. So that's what I'm trading. Okay. All right. Go back to gold. Somebody brought up a question on gold. So gold at 46.81. Somebody's asking, do you see 38, 3,900? What's probability? I mean, here's what I'd like to see. I think that gold is, the big mania has cooled off a little bit on gold. What I see technically is if we have structure that looks like this, I could see gold going back down to around 3,800. Am I shorting it down to 3,800? No, I'm not. But what I am doing is I will use any pullback to this 200-day moving average or to that measured symmetry, which I'd say this, between about 4,300 and 3,800, I'm very like insensitive to price. I would just buy more, and put in my stake there. That to me that's like the allocation level that I've been talking about. That's kind of getting my portfolio back up to like a 3, 4, 5% stake in gold. And from there, this channel works itself out. Maybe it troughs and maybe it bottoms out. But I mean, it's having these high swings like so. If we have one more, I mean, this is going to rattle a lot of longs out as far as the retail side. But to me, this is where bigger money was going to be excited to maybe buy in. And then hopefully we see a move back to all-time highs. Again, time-wise, I'm long for the foreseeable future. And look, I'm long now. I mean, when this first dipped, I bought. When it dipped lower, I bought. So if we make another low, I'm going to buy more. Okay? And if we break this structure and we're on the right-hand side of the trend line, I'm probably going to stack up some trades over here to buy and add to my winners. My target is let's get back to these highs. If we get back to these highs, that's my target. Now, obviously, we can go higher, but as far as my stake and position and trimming some gains, it's going to be once we get back to these all-time highs. Same thing on silver. Okay, so silver, I mean, and silver mania was crazy. Silver outperformed gold in a big way. You can see that with the ratio. So here's the gold and silver ratio. Nick and I talked about this quite a bit. I mean, and when the gold-silver ratio was up here, this is why I said I like silver more than gold. And the reason why I liked it more is because it was way cheaper. Gold had already outperformed and was doing very, very well. And silver's obviously like the poor man's gold, as they say. And it was way cheaper. And because of this ratio, I thought, well, even if silver outperforms a little bit, it's going to be a more attractive trade. I mean, talk about outperformance. This was all silver dominance. I mean, we had a gold run that was incredible. We had, gold was up 100+%, right, in the last 4 or 5 years, but silver was like double that. So both trades were great. But now that we are down here towards these lows, now we're going to kind of figure out like a battle range of who outperforms. The funny part is I don't think you can really go wrong with either one. I think if you're long gold or long silver, I think either one are going to have pretty good opportunities to stay long and see some highs get retested. Silver might get a little bit of an edge because of the AI play and the need for it, because it's not only strategic, but it's also industrial. And then gold is just, do you think that the world's going to print money? Do you think the world's going to have some fiat problems? Do you think the world's going to debase its currencies? I mean, probably check all those boxes, and that means that gold's still going to catch a bid. Central banks still like buying gold, right? Central banks are trying to move away in some way, shape, or form from U.S. treasuries. In a way, there's still plenty of inflows coming to the U.S. It's not like we're going to have failed auctions or anything, but I think that the alternative side is, countries are looking to have some type of store value that's a little more, permanent, I guess. And I'm sure the gold standard in some way, shape, or form is going to matter. Again, it just might be a new system. So that's probably the most scary thing ahead is if we have this major fiscal reset, nothing's safe. If we have a fiscal reset, nothing is safe. I mean that. Like gold could go up to infinity, but it might also crash 50, 60, 70% along with markets. And I think that if you're the type of trader that's cheering that stuff on, I don't want to be in your shoes, because I think you are literally fighting. You're fighting blank checks into this current market, which is everybody loves AI. It's the only thing keeping corporate profits high and efficiencies high and productivity high. It is the positive narrative that the market is latching onto. The labor market is not struggling in the U.S. It's slower, but it's not struggling. I mean, as long as we can maintain 20 to 25,000 jobs in the U.S., we're fine. You know, the tech side is laying off people, yes, but there's still plenty of healthcare jobs going around. There's plenty of it's mainly healthcare and services right now that are employing, as well as what I was reading is like software tech and like software management, and a lot of it's probably just the AI departments that are just starting to expand. So jobs will be created. I just think that everyone's taking the negative on everything. And it's like, we're at all-time highs. You're at all-time highs, you know, and the market likes to make more all-time highs. When it's right there, it's easy to poke highs. So anyway, I just think you're silly to fight what is, you know, every country right now is like trying to embrace AI to the fullest. They're spending like crazy. And this isn't, I don't know. I don't love debt. I don't love the debt from the hyperscalers that are doing like circular financing, but I still think that they've made enough money over the last decade that they can swing it. And if they're going to support it and they want to build out this infrastructure, more power to them. Doesn't mean they're going to be the best performers. It just means I think that this is the optimism that the market's still going to latch onto. So anyway, all right, we'll talk other stuff. So there's gold silver ratio. I like gold. I like silver. I sound like gold member talking about that. Bitcoin, 80K. I'd mentioned this when Nick was on last week. You know, we're sitting right at an important moving average. This is my 200-day moving average that Bitcoin is at right now. Look, a break above this is really exciting. I think that we have more run to like 95 to 100. My biggest concern on Bitcoin is that we poke this high, but here's what I'd like to see. I'd like to see Bitcoin, if we get above the 200-day moving average, I'd like to see it make a run up above, clear this high around 100K. Okay, don't fail at it. If we hit it and fail, I have a feeling that either one, this is going to be, you know, a great head and shoulders trade, which ultimately could lead us to another really good position. This could be a head and shoulders trade, and sure, we break the neckline, we go higher, excellent trade. But a failed neckline could also be the rejection that puts us right back down to a fresh low, and that'd be from this symmetry that puts us down to about 40K or 30K. That's where I'd like to say, you know what? If we get there, I'm buying Bitcoin. It's going to be so out of favor. Nobody's going to like it. Everyone's going to say it's going to zero, and we can buy it at 30,000 or 40,000. Look at like a 3x move to the upside, and take defined risk. But all I'm saying is, if we get to 95 or 100K, I want to see how it behaves. The easier structure for me is if we break structure and we take out this level, then I think we have a pullback, a higher low, and then we can talk more of a bull market structure. But if we fail at 100, I think that we either retest the low again, or we maybe even break a symmetry low. So food for thought. All right, today's news. Somebody's coming in asking, what happened? Well, we had PPI numbers come in really, really hot today for the U.S. This is not out of the ordinary. We've seen a couple months of higher inflation prints, and this is what kind of backed the Fed into a corner. I looked at this stuff yesterday. So take a look at our Fed watch tool. Okay, so this is CME watch tool. Probability of doing absolutely nothing. Okay, but this is what changed yesterday. Yesterday, when I looked at this closing bell, this was blue the entire column. But now you can see that the markets are jumping around thinking that, the Fed might have to raise rates. Not in 2026, but look at this. And again, you can't say that they're going to raise rates. It's like this is a 3% difference, right? But this was around 14%, and this was around 40-something percent, and it just shifted. So now the market for a moment, and this all can change, but for a moment, the market's showing that next year that the Fed might be looking to hike by 25 basis points. Okay? I don't think they know. I think they know right now that they want to wait and see. I think if Warsh comes in as a Fed chair and wants to cut, I think one pretty potentially problematic decision would be we cut into what is clearly higher inflation. I mean, the Fed has not been known to be proactive on anything. So if we're cutting into higher inflation numbers, I don't think the market's going to really take that well. It might take it for like a short-term boost, and that might be like the squeeze to the upside. But I feel like that's going to end well if they have to pivot and go from we're cutting rates to, oh crap, we need to now raise rates. Okay. So most likely the Fed is going to do nothing. And, I mean, we saw them do a lot of nothing. They raised rates like crazy in 2022. They cut rates like crazy in 2024 and 2025. And now here we are. Pause, 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 pause. That's what the Fed is doing. But this is the big shift is, oh my gosh, maybe they have to hike now. Maybe. I think they're going to do nothing. I think we're going to have to wait and see if oil cools off. I think we're going to have to wait and see if these inflation numbers month by month cool off. We'll find out. But inflation is certainly sticky. Now, to be fair, inflation at 3, 4, 5% is still a positive catalyst for growth. It's a growth catalyst. You can't really have inflation under, 2% or 1% and expect a lot of growth. So, and I know I get it. Like, there's an affordability crisis. Stuff is more expensive. That's all very real. But having the Fed pause and kind of normalizing at these rates that we're at right now, it just means that there's a lot of standstill. And, how long can businesses hang on with these higher rates? I mean, probably longer than we think. The private equity market, I think it's more resilient than people think. And it's also a much smaller piece than I don't want to butcher the numbers here, but I think during the great financial crisis, I think that subprime was up to like $60 trillion, all wrapped up in all those like subprime mortgages and collateralized debt obligations. $60 trillion. Right now, we're talking like $2 to $3 trillion. So it's a much different sliver of the total pie. So again, I've looked past the private equity woes. I think it's made good headlines and it made people scared. Certainly, if you're a limited partner in a private equity firm that's telling you can't get your money back, that doesn't feel good. But the bottom line is it's a much different scenario than what we had before. So anyway, long story short, Fed's going to probably be inactive, not doing much of anything. War steps in. The market might find a way to test him. We'll see. But we just had a little bit of a blip down. We're trading and holding at 7,400. I'm curious what today looks like. I mean, I'm getting some interesting readings today. 7,400 looks like a pretty big level this morning to kind of pin. There's some major gamma here, but I'm starting to see some light ups. 7,350 might be gettable, but that's an if. And then above, I did have some easy readings this morning at 7,450. I just don't know if the market's going to be ripping all morning. Now that we have the news out, I could see this being like a big nothing burger, maybe more volatility coming Thursday, Friday with maybe Trump and Xi making some headlines. It'll be an interesting day. Okay. What else? Cut a runner on gold. Good. Okay. What other requests? You want to take a look at some stocks? You want to look at more currencies? I'll give you a quick currency rundown. I've got, it's 9 o'clock. Jeez, Pete's stuff flies by. I'll just give you my currencies. I'm long Aussie CAD, long New Zealand CAD, long Aussie New Zealand. I'm looking to get long. If dollar CAD comes low enough, I'm looking to get long. I'm still long against the Swiss. Aussie Swiss is killing it for me right now. I've got some profit targets set. I'm probably taking some profit here. I'm up about $3,200 on my Aussie Swiss position. So if we get up a little bit higher, that should be adding up to maybe another $1,000 or $2,000. And I'm going to take some profit up here. I'd like to see the other pairs freaking catch up. CAD Swiss is still sucking. I'd love to see this thing break above. Man, 2026 that'd be my ultimate Christmas gift this year is if the Swiss would pay me for the 2 years I've been holding it. So anyway, all right. I know I think we have our next guest standing by. And yes, I went a little bit long, so I apologize for that, but I'll turn it over to our next guest. James, we're ready to go. I think Marco's standing by next, yeah? So if so, I'll let you go and transition over. Thanks, everybody. We'll see you tomorrow.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good evening, good afternoon, wherever you guys are watching this. I hope you guys are having a fantastic Wednesday. Though for me, it feels like a Monday. It's good to be back. It's been some time here, and I definitely missed you guys. So if there's any chart markups, anything that you guys want me to go over, feel free to go ahead and drop those into the comment section, and I would do my absolute best to give you my honest thoughts and opinions. But let's go ahead and get started here with markets. So I'll go ahead and talk about what I left the market environment. So before I left, we had some progress in the Middle East, which seems to have been thrown out the window as of now here. But we had some progression in the Middle East. We had some Bank of Japan intervention chatter as well. It seems like they intervened 3 times. And then you had a recovery here in equities, right? And then as of yesterday, we did have a higher CPI, and this morning as well, we had some higher PPI figures there. So the inflation story in the U.S. is looking to go ahead and tick up higher there. Equity markets are somewhat ignoring that. It seems like they are looking past that, as we do have the next meeting there for the Fed in June. So they're probably betting on a resolution sometime before that. However, I do think that if you were to continue to see some, the inflation story trending higher past 4% and no resolution there in the Middle East, oil higher, yields higher, then you probably do see some kind of a correction there in the equities market. But for now, it seems like they are moving completely past that, right? So kind of what we're dealing with here today. As far as trading equities here at these highs, I would advise against it. Again, not financial advice, but just not something I would, like to do. I would wait for some kind of a pullback here. I mean, even all the way up into here, which it seems like it's a far as away now, but I think a 5, 6, 7% correction there is still a healthy uptrend there in the equities market. So if I were to do a Fibonacci retracement level here from here to here, 50% is right, at this breakout level here when we breach all-time highs. 38.2% still looks okay, but going from where price is right now all the way to the 38.2, that's 7%, and then 10% at the 50%. So that's kind of my thought process there on equity markets. It seems like the AI trade is kind of leading the way there, but again, a little bit of a tricky situation, right? You do have the inflation story in the U.S. starting to take up there. As far as dollar index goes, right? I was saying that making a directional call here at 98 handle was a tough one. Now that we have some more figures there, we had some figures down for the U.S. last week, and now you're having some sticky inflation. I do think that dollar index probably hires the path of least resistance. I would say you're still in the middle of this overall range here, so the dollar index has been chopping around back and forth between 100.5 and 96.5. Right now, we found some support here at the $98 handle there. So I do think that if we were to breach like this 200-day moving average here, an important one, I would say, then the path of least resistance would be to 99.5, I would say. But yeah, we'll go ahead and see how that is working out here. We do have an interesting currency strength chart here today. We do have Aussie dollar, US dollar as well. You do also have the Canadian dollar up, and then you had some weakness there in the Kiwi dollar. Kiwi dollar getting some weakness there, is doing pretty good there from our Aussie Kiwi trade. They did go ahead and push back the rate hike odds for May. And so now the next one is going to be priced in for June or July. I can't remember which one. But yeah, so basically the May hike was taken off the table there. That's giving that pressure on the Kiwi dollar. And so Aussie Kiwi is doing quite well for me. I'm looking to go ahead and trail stops here. Like with this one here, a little bit different, right? So if I go to the weekly time frame here, usually when I'm trading major currency pairs, I have like hard targets. Something similar there with the miners there, but with this one here, we seem to have broken out completely out of this level here. So I'm just looking to trail stops. And so if I'm looking left on my chart, somewhere 1.24 looks okay to me right here. So if I just go down fractal to a 4-hour time frame, if we were to breach above this level of resistance, I'll just trail stops and then keep this one running. So I have a good position there on the Aussie basket long. I have Aussie Swiss as well, which is doing quite well for me. So we are getting to this recent relative high. Again, looking to go ahead and trail that. Aussie CAD as well, doing quite well. I'm kind of targeting parity on this one. So 1, right? I think that's a good level there for Aussie CAD. I'll probably look to take profits there. I do have one position that is working against me here, which is dollar yen to the short side. I took this one while I was on vacation when we did have this, this second leg or third leg here of intervention. This one traded down lower. I was in profit, but now I'm in a little bit of drawdown here. This is a relative small position. And although I do have negative swaps on this one, all of these other Aussie pairs are giving me some positive swaps. So this is actually not really, I have a net positive swap, considering all trades there. So if I take this level here and I take this zone here to the left, It seems like this was some good support here, possibly resistance here on dollar yen. If we do go ahead and breach this level, then I'll just cut the trade and look to re-enter if we do get back into the 160 territory. Now, as far as new trades that I'm looking to take, if we do continue to see that dollar bullishness narrative there, then I do want to take euro dollar to the short side. We did get back to this level here, 1.18, which is a good level of resistance, I think. So I did go ahead and miss that trade there. So what I would look for in euro dollar is some kind of a pullback back into this level here, maybe 1.178, and then trade that to the downside. But if we were to get, for example, the euro dollar trade works out and we get to 1.165, I probably won't do anything, right? I'll probably just sit back, wait, and just wait for these, manage these other positions that I'm in, which is the Aussie basket. So kind of right there, what I'm playing there. Euro pound is actually something that I was playing. What was it before I left, right? And I took profits while I was before I went on vacation there. So we are back up into this level of resistance. So let me go ahead and verify with the edge finder here to see if that is still in play. Euro pound, I don't think so. Let's see euro pound. Yeah, euro pound's getting a neutral reading of 3. So no longer that strong bearish reading that we're seeing there in euro pound. So I'm going to go ahead and scratch this one. I'm not going to go ahead and play it. We did get close to that 200-day moving average, though, here yesterday night. And then we have since, retraced that move there. So we'll see. But the edge finder is telling me no can do on euro pound. So I'll go ahead and stay away from that. And by the way, guys, go ahead and get yourself a copy of the edge finder there. I do have a code. It's code ASPIRE. You get 25% off. And you can take advantage of this lovely tool here. This tool has been very, very impactful for me as far as finding good trade setups and filtering out the good ones and the bad ones. So definitely go ahead and get yourself a copy there. Also, join the Telegram channel. It is completely free to join. Every day we do chart markups, all that good stuff, giveaways, discounts, everything that is valuable for you in your trading journey. You can find it there in the Telegram channel. But let's go ahead and look at the chat here to see how things are going. Sluggy, how you doing, my man? I missed you. Max, how you doing, man? We were chatting there privately while I was out. Looking for New Zealand CAD, 50% fib. Let's go ahead and look at Kiwi CAD. Kiwi CAD there. I'm assuming you're going to the long side there, Max. Looks pretty good. We had this strong move upward here. We do have the 50% fib retracement there, like you mentioned here, nearby those 200-day moving average and the 20-day. So that's pretty good there. I think that's a pretty solid level of support. So if you're ready to pull back into Kiwi CAD, seems like a good one there. Maybe we have some continued weakness in the Kiwi dollar as that May rate hike is off the table there. However, we will see, because it seems like, inflation is starting to trickle into every other, economy there. And so I think Kiwi CAD to the long side might be a good one if we do get that retracement there. Hey, Alan, what's going on? Any thoughts with pound yen and euro Aussie? Yeah, I can go ahead and look at that. Let's go ahead and look at the edge finder first here to see if it's worth even looking at the chart. Euro Aussie, where are you? Euro Aussie, I can't find you. Let's go ahead and just search it up. Euro Aussie. It's getting a neutral reading, so probably won't touch that one. And then pound yen. It's getting a bearish reading of 8. Pound yen, I don't like to trade, man. I'll be honest with you. This thing is super volatile when it starts moving. I hate this pair. I probably wouldn't trade it, and for that reason, I probably won't give you a solid outlook there. It's bearish reading, right? So probably look for a technical confirmation there, and then have your stop loss as wide as possible. Seriously, like, this thing moves pretty quick. So that's my thoughts and opinions on pound yen. Max said Alan, was Croatia good? Expected weather is raining when I go. Max, I'll tell you this. The weather was supposed to be raining as well when I went, and it pretty much evaporated. So I had experienced essentially no rain at all. It was one time where it rained in the middle of the night, but then by the time I woke up and went outside, everything was nice and dry. So I hope that's the case for you, Max. It was very beautiful, though. So, yeah, you're going to have a great time. Can you look at Aussie CAD long, please? Yeah, Aussie CAD is one that I have to the long side. I'm in this trade here. We got a pullback, or we were holding support here at, what is this level? 0.975. So it was holding up well there. I took a long position there, and we have since continued running up higher. So I like this position a lot. I'm going to target parity here. So just, 1.0. That's going to be my position there on Aussie CAD. And the positioning on the Aussie dollar has been quite consistent to the long side. So the Aussie basket as a whole is doing quite well. So Aussie CAD getting that very bullish reading of 9, Aussie Kiwi as well. Aussie US dollar is getting a bullish reading, which Aussie US dollar, a little bit tricky in my personal opinion, now that you do have some inflation getting sticky there in the US. You do have the battle of the higher yielding currencies there with Aussie US dollar. So I might stay away from that one. But nonetheless, Aussie CAD, Aussie Kiwi, Aussie Swiss as well is one that I really like. So yeah, I'm going to go ahead and continue those trades, holding them on and just trailing my stop losses. But all of them are in profit. So I'm in a pretty good position when it comes to the Aussie basket. We'll go ahead and talk about gold and stuff here when Marco joins me here shortly, because I know he has a gold position. And we do have, some movement there in gold. I know it was up a bit. Now it's down, kind of chopping sideways. Bitcoin as well, starting to move there higher. But we'll go ahead and talk about those when Marco joins this segment. But for now, I'm pretty much positioned Aussie long, the Aussie basket as a whole. And it's doing quite well. Have I spoken about UJ? Yeah, so UJ was a position that I took while I was on vacation, a short one. To the short side, there was a small position. Although it is giving positive or negative swaps there for UJ to the downside, because I have all of these positions, this Aussie basket long, I actually do have a net positive swap at the end of the day when it's all said and done. UJ is now getting up into this level of what could be resistance here. If you move this level to the side, to the left there, this was previous support. So in my opinion, if you were to go ahead and breach this level, I'll just cut the trade and then take another small stab at it here once we get into the 160 levels. But that's my thought process there with UJ. Another thing too that could hurt UJ story to the short side is if you were to get, right, let's go ahead and look at CME Fed Watch tool here. You do have the odds there shifting more in favor to rate hikes. Now, this is not set in stone. This fluctuates, very, very quickly in this current environment that we're in, right? One day you have rate cuts as, December, right? And now you have rate hikes as soon as next year, 2027. So this is not set in stone at the moment. The market is pricing in for higher rates in the US potentially. And so that go ahead and widens the rate differential. And so that can, hinder this dollar yen short side idea. It could hinder the entire intervention that the Bank of Japan just did. I think the markets don't want that. I think the markets are thinking that the intervention can hold for a little bit, but that's something that you have to realize, right? If you see oil higher for longer, yields higher for longer, then that definitely, the rate differential definitely widens for dollar yen, and that helps it drift higher back into the 160 territory. Marco, how are you, my friend?
Hello. Long time no see.
Long time no see, man. It's been a couple hours. It's been a couple hours.
Did you have a good flight back?
It was a good one. It was a long one. We were going against the grain, so it was definitely longer than what we did going up there, but it was awesome.
Yep. Nice. So back at the charts, what are you running? UJ?
Back in the saddle. I took that UJ short. I think I mentioned to you when I was over there in Croatia. I took another stab at it. Small position there. It's going against me here. We're hitting some level of what could be resistance, but willing to cut this trade and let it and take another stab at it at 160. This is a small position. The bigger position or the bigger basket here that I have is Aussie CAD. CAD, Aussie Swiss, Aussie Kiwi is a Aussie basket trade that I took prior to me going on vacation, and it's working out quite well for me. So I'm just trailing stops on these ones. I'm willing to hold on to it. There's really nothing else that I see. The gold story was improving last week or the beginning of this week. And then you had CPI come in hot. You had PPI this morning come in hot as well. So the inflation story in the US is keeping those yields bid up there. So that does kind of hinder the overall gold story. But for me, I'm just holding on to this Aussie basket long, honestly.
Yeah, nice risk on play. So I do like that. And before I continue with the charts, I just want to mention, if you guys want to participate in the DNA funded giveaway, so it's a bit of a different format. First, you need to join the free Discord. I'll post the link for the free Discord right now. So join the free Discord, and then in the free Discord, you're going to find the channel called Giveaways. Now, in that channel, you will have another form that is posted. That one is going to get you into the giveaway. So just wanted to put that out there. If you want to participate in the DNA Fund giveaway, it will be a 5K one-phase account. And now back to the charts. So for me personally, I think the most interesting story right now could be the US dollar. So essentially, if we look at the DXY, it's kind of in the middle of this range. It's not really doing much. And in my opinion, there were two forces at play here. So I want to get your opinion on this, Alan. The first force is pushing the dollar up, and that would be kind of US exceptionalism. Nasdaq absolutely flying higher, S&P flying higher as well. What do you need to buy stocks in the US? Well, you of course need the US dollar. So that was the force that was pushing USD up. But the force that was pushing it down was the interest rate differentials. So basically, the Fed was supposed to be the only central bank that is going to cut interest rates. Most of the other ones were looking to hike interest rates. So that made the dollar weaker on paper compared to all of the other currencies. Now, what I'm guessing could happen is the Fed can actually flip hawkish, meaning flip from rate cuts to rate hikes, which then brings this line to the upside, and so you have a huge catalyst for the dollar to explode higher. So you have both the US exceptionalism, the US stock market raging up, and you have the Fed being hawkish, which could push the dollar to the upside and could start that initial uptrend, could start a new Fed hiking cycle. Because as you mentioned, Alan, I haven't checked out the PPI print, so let me do that now. So PPI, whoa, definitely came in hotter. Definitely came in hotter. So the CPI came in hotter, PPI came in hotter, and that is definitely a story for hikes. So what's your take on that? Do you actually believe the Fed could hike, or is it just wishful thinking?
I think that the more data releases that we get, the more likely the Fed is going to hike. I mean, looking at the CME Fed Watch probabilities, it tends to shift, right? If you were to get a positive headline when it comes to what's going on in the Middle East, this thing will shift, right? So I think right now it's a little bit volatile, but you do have the next FOMC meeting in June or July. I can't remember which one it is. And so when it comes to like the stock market, right? Like right now, my current positioning is risk on. You're seeing that in the equity markets as well. They had a CPI print that was harder than expected. Was it Monday, right? Or something like that? Or Tuesday? Tuesday. Okay. Yesterday. Market sold off, but now has since recovered. You did have a higher PPI number today as well, and the Nasdaq is green on the day. So it seems like markets are essentially betting that by the next meeting there will be some kind of a resolution. But if there is no resolution, then I can think that there is going to be that higher rates for longer narrative that's going to propel the U.S. dollar. Another thing too, let's say that the war ends today. The Fed members as a whole, I'm thinking about Powell's most recent speech there. They're waiting for tariff pressures or the tariff inflation to pass through entirely. They still haven't seen the back end of that. And then they need to see the oil pressures pass through entirely as well. So you do have that narrative where I think that the Fed is positioned in a good place where they can at least hold rates for a good while. Even if they don't hike rates, they're going to hold rates, and I think that's still going to propel the dollar. So when it comes to the longer term narrative, I do actually like dollars to the upside. We were trading in this range, right? We were at the midpoint here at the $98 handle. This seems to be good support there. If we were to breach that 200-day, I do think that you probably just drift higher into the next zone, which is 99.5, and then the one after that would be 100.5. So I saw that you did a euro dollar short position. I love that idea. It seems like I have missed that train there, but if we were to get somewhere back into the 1.18 or even 1.178, I'll definitely look to go ahead and take a stab at that to the short side if we do go ahead and get that pullback. And the story is a higher dollar, right? We actually have seen some strong fundamentals in the US as well. Labor market's holding up well as of the last NFP report. Growth is doing well. So yeah, I like that story a lot, actually. One of my my biggest winners, like usually, like if you look at all of my P&L, euro dollar trading to the short side, essentially going long the dollar, has been one of my most profitable positions.
Oh, really? Okay, that is pretty interesting.
Yeah.
But the reason I paired the dollar with the euro is because the euro is not such a great currency, and the DAX is no longer beating the S&P. So if you remember a while back, there was the story that the US is done and that the DAX will just explode higher and beat the S&P. Well, as we can see, the DAX has been flat for a year now, while the S&P is raging into all-time highs. So that is also having a negative effect on EU. So you have kind of rate differentials pushing EU up, but you have what's happening on the stock market pushing the rate down. So if you get the Fed to commit to hikes or at least stay neutral, just sort of say we're not going to cut, that could bring the euro dollar down and give us sort of a nice push lower. But I'm also positioned risk on, and I never thought I was going to say this, but I'm positioned risk on, so I bought gold. So I'm in a buy gold position. I have my Bitcoin, yes, so that is still running, but I also have a gold position which I recently took an initial stab at it, and then I have a second buy limit placed in the market as well. As far as gold goes, let me first hear your take on it, and then I'll give you mine.
Yeah, well, it seems like you're hedged, which is good, right? That's a good position to be in. So you're essentially long the dollar by going short the euro dollar. And why I love the euro dollar so much, it's not necessarily because the relationship between euro and dollar, but well, a little bit, but I like euro dollar a lot because I put a lot of emphasis on US macro. So although I don't trade actively like like the indexes and stuff like that, US macro definitely influences a lot of things, and I put a lot of emphasis on it. And so the dollar, or the dollar basket, is made up majority by the euro. So if you put a euro dollar chart next to a DXY chart side by side, it's essentially the same chart. So that's why I like dollar index. But I do like that you're essentially hedged. With gold, I do think that, if you were to establish a position here, I would prefer 4,400. Right, that's just my personal opinion. You do have yields higher at the moment. Oil is sticky up there, and then you do have the prospect that the dollar does catch a little bit of a bid there. All of those three things are a bearish catalyst for gold, so you do have an opportunity to get a better price at 4,400. But building a position is also not a bad idea, right? If you have the understanding or the idea that you're willing to take another position at 4,400 if price goes against you. That's what I do all the time, right? If I like a trade, or if I want to be early to an idea that hasn't really, come to fruition yet, but I have a pretty good bias on it, what I would usually do is put a half position where price is, where I think is okay, but then be willing to establish another position for another half size position at a lower price. That way, if I'm early to the idea and it starts working out early on, then great, I'm in it, right? But if it goes against me, I still have the opportunity to re-enter or better my cost basis at a lower price. So that's my idea on gold. What I would do was, ideally I would get a position going at 4,400 and then have a stop loss at 42, or somewhere between 4,000 under this 200-day moving average. Sorry, I have this alarm going off.
Yeah, no worries.
That would be my idea for gold.
Yep. Gold will definitely not be a good buy if we get the Fed flipping to hawkish, to hikes. Of course, if we get the Middle East conflict, if we get a resolution, then gold could catch a bid. But I think we're not gonna go down much. I think sort of the weak hands with gold have been shaken out. We got 2 huge rejection wicks. China is still a big buyer of gold. Central banks all over the world are trying to move away from the US a little bit, at least, and move away from the dollar and go into gold. A lot of big players in the world have sort of came to the conclusion that they are underexposed to gold, so they just want to buy. And Edgefinder printed the bullish reading yesterday, so kind of most of the confluences that I'm watching have all aligned. And most of the veteran traders that I'm following, such as Brent Donnelly or Andrew Campbell or even Nick, like Nick mentioned, he would have been in gold if he wasn't traveling. I think he put it in the Discord that basically he didn't place the order in time, but he would be in. So I also found if most of the people that I'm following are in gold or in something, it usually goes up. And one more indicator, online I'm seeing a lot of hate when it comes to buying gold right now, and that's usually a good sign to buy it because the retail is mostly wrong. So that's another one.
I will say this: if I were to make a directional call on gold, I think worst case scenario is that it just trades sideways. which to
Yep.
some they could stomach that. I don't mind being in a range, right? If I'm early on a trade and I know that, or there's a probability that it's going to go higher and I'm just sitting in drawdown, fine. Some people hate it though. I don't. It also depends on position sizing as well. If you're in a monster trade on the thing and it's sideways, then you're going to have some heavy swaps there. But
Yep.
if I were to make a directional call, I think that it's going to be range bound, if anything, in this current environment. And then if the environment improves in favor for gold, so you see oil lower, yields lower, dollar gets a little bit softer there, or whatever the case may be, right? It could be a multitude of things. Then gold, definitely starts to take off and get to shine again. But yeah, I mean, if I were a trader of gold, I would wait for somewhere right here, which we actually got quite close to that 4,400 hat. We were $500 an ounce away from it. But yeah, that's my thoughts on gold there. How about Bitcoin? I know you're in this one as well. And it's just grinding higher there. We are meeting up with some key moving averages, the 200-day, which is good. And that 20-day seems to be acting as dynamic support there. Is this one that you're continuing to hold on to?
Absolutely. And also, last thing I want to mention with gold, we're also printing a bit of a triangle here. So if we just put on some simple trend lines, like you have this one and you have the one going, not this. You have the one going from the top, and they coincide right in the current price action. So if we get a break up, if we get a breakdown, there could be some follow through in both scenarios. So there could be some volatility coming in for gold. The price action seems to be squeezing into this triangle, which is a good sign for volatility. Bitcoin, as you mentioned, we are sort of stuck at the 200 EMA. So we are rejecting off of that. Can't seem to break through. But I think it's coinciding with what's happening with stocks. So stocks have paused a little bit, especially the S&P has paused a little bit this week. So unless stocks can break out higher, I'm not seeing such a great case for Bitcoin to continue. I'm looking to trail the stop loss because there is a high chance of a correction. There is a high chance of a pullback on stocks. So Bitcoin could follow. And I don't want to get out for a small loss. I would rather get out for, let's say, 0.5, 0.8% winner. So I'm looking to trail the stop loss tightly and let the market take me out if it wants to. If it wants to continue, then great. Personally, I'm seeing a bit of a correction in the next few days, maybe even the next few weeks even. Yeah.
I mean, that's a good position to be in. You're right. If you trail stops and a winner is a winner, I would say. Sluggy brings up an interesting point here. Take on pound. We have GDP tomorrow. So let's look at the pound, what the estimate's going to be. It's a slight tick up there year over year. Estimate month over month is going to drop a little bit. One trade that I was in that I really loved before I left on vacation was euro pound to the downside. Now that reading on the edge finder has since dwindled. It's not that strong to the bearish side. In fact, I think it's a +3 reading. But look at this. You do have equal surprise index here. Pound is beating expectations, doing quite phenomenal. And then the euro, right? The euro is also doing quite well. Dang, I thought the euro was doing a lot worse. In fact, if you were to see a continued price action to the downside in the euro, it continues to weaken and you see some misses out of there, I do think that euro pound to the downside would be a really good trade. Any thoughts on that one? Because it was a very strong reading there in the edge finder and it's now kind of staling out there.
I would say I'm not looking to buy the pound. I would focus on selling it. I know that the economic data is bullish right now, but I think the long-term data is really bad. So it doesn't coincide with the short term. Usually if I want to buy a currency, I need the long-term data to coincide with the short term. And if we just briefly open up the edge finder, so let's go to the edge finder here. And if we go to the data and just look at the GDP and a couple of other prints. So GDP for the GBP, very low. So very low, 0.1% contracting. Then you have inflation, which is going up. So there's not a lot of room for the Bank of England to fix this. So let's just see 3.3% and rising. It's probably going to rise even more if the oil crisis continues. And then the final one is unemployment, which is slightly ticking higher throughout the sort of the months and even the years. So if we go back 2 years here, you can see from 4.2 to 4.9%. Yes, the latest print was lower, but it's just one print. I'm focusing more on the long term. And I do believe yesterday they had elections or something happened. And I think that the PM, Comrade Keir, as they call him, Keir Starmer, is supposed to step down. So that creates uncertainty. That makes the pound bearish, in my opinion. So my stance still hasn't changed. And if anything, I'm looking to sell, for example, the pound Aussie. I think
you bring up a great point. Yeah, that lower growth added with inflation there is not good for the pound. I'm looking at the chart here on the daily. This is daily candles here. It's been just hanging out in this range here for about 14 days, which is not pretty good. So yeah, I'm actually looking to see how the reading improves there for the pound, because yes, recently you have had some kind of a bid there in the pound, but if you add into the prospect of a higher dollar, that can definitely, make a pound dollar to the short side. If I'm looking at the reading, the pound pairs are actually getting weak. So pound Swiss bearish, pound yen, pound Aussie.
Yeah,
pound Aussie actually sounds pretty good, actually. So let me look at pound Aussie. That'll be the last chart here I look at, guys, before I go ahead and head out, because my time has run out. So pound Aussie is moving. Yeah, I can't trade that. I'm shorting the lows there. So pound Aussie probably not the best, but pound dollar seems to be at a relative premium if you were to continue to see some bid there in the dollar. So that's something that I'll keep on the horizon, guys. Thank you, Sluggy, for bringing that to my attention. Yeah, awesome. So, all right, Marco, I'll go ahead and let you go, man.
Yeah, sure, no worries. I just wanted to mention pound Aussie. I have the same opinion. The train has already left the station. I think it's just too bearish. If we get a pullback, then fine, but I don't think we're going to get it. And pound dollar could be a good opportunity, as well as selling EU, especially if the Fed flips to hikes. So see you tomorrow, Alan. Thank you very much for doing the joint stream. And yeah, let's see if we get some dollar moves.
All right, man. Take it easy, man.
Yep. See you. Goodbye. So I will go through the giveaway one more time. So if you want to participate in the DNA funded giveaway, you first need to apply to the free A1 trading Discord. Here is the link to join. So you have a jot form that you need to fill out. Join the A1 Discord and then find the channel called giveaways. In that channel, you will have the link. To basically join the giveaway, join the Wheel of Names. It's going to be a 5K one-phase account. And if you do want to get funded, we have a discount code for you as well. So DNA funded is 25% off with the code A1 Live. Okay, so any DNA funded challenge, code A1 Live gets you 25% off. Comments. So Sluggy says, I love GU shorts. I would agree. Pound Aussie is overstretched. I would agree with that as well. I mean, look at where the 200 is. We're just on a massive downtrend. UK don't like their prime ministers. They do change their prime ministers often. I really don't like this latest one. I think he's super incompetent. So hopefully he actually steps down. Marco, if you must sell GBP, GU is a good cross to short. Yeah, I mean, it would be a similar trade idea to what I have with EU. EU could be a little bit better because you can see a direct underperformance of the DAX. Do we have the FTSE here? FTSE. Can we do this? Put it there. Yeah, the FTSE is struggling as well. So I would say it looks healthier than the DAX, and that could be connected with the currency. How could that be connected, you may ask? Well, if the S&P is outperforming the DAX more than the FTSE, well, that makes the dollar stronger against the euro rather than stronger against the British pound. Just one of the catalysts, right? Because money may be flowing out of EU into the US, out of the UK into the US. Right now, the question is, where is it flowing more? I would say it's flowing more out of the DAX or out of EU into the S&P, out of into the States, which is bringing dollar up, which is bringing euro dollar, which is one of the forces bringing euro dollar down. But in that same vein, you can sell GU. It's not a bad trade, especially from what Alan showed. I think we're kind of hovering at this level of resistance, so could be a good level. This is not financial advice, but if you're not short EU, you could consider GU. I know the Edgefinder reading is not clear, so if you go to top setups, or it's probably bullish, right? GBP USD. No, it's neutral. It's neutral, but in this case, I wouldn't need a confirmation, and EU is not bearish either. So yeah, it's neutral. EU is neutral as well. I basically don't need the Edgefinder confirmation for this particular trade, for the EU trade. I had the confirmation for buying corn. Is it selling off now? Yeah, it seems to be selling off. I had the confirmation for selling gold, but for EU, I don't need it. And EU is a bit of a hedge against my risk on exposure. So if this trade takes me out, if gold takes me out, well, then this one should work. Marco, GEP strong currency. Marco, you're a pound seller. Hello, Tony. US oil is a buy. My personal advice, I wouldn't touch oil at the moment. I just wouldn't do anything with oil. I think your edge in trading oil is very, very small. So oil is highly impacted by geopolitics, and you don't want to mess around with geopolitics at the moment. I mean, to be able to profit from oil, you need to know what Trump is thinking. You need to know what Iran is thinking. You need to know approximately what will happen to the Strait of Hormuz. To have a real edge, have real alpha. Who has that sort of an edge? I would say possibly no one. Possibly no one. So why not just move away from oil and find an edge elsewhere? The markets seem to move on. So stock market seems to have moved on. It's just raging up no matter what happens in the Middle East. So there's better opportunities out there. Mihafid says, Mark, congratulations on your marriage. So we didn't get married yet. I just got engaged with my girlfriend. But thank you very much. Thank you for the kind words. What's up, Marco? Any thoughts on USD Swiss? USD Swiss, USD Swiss. USD Swiss. Not really. Not really. I mean, if anything, I'm bullish USD Swiss. But I'm not looking to play it at the moment. I think only thing I'm looking with the dollar right now, I already have it in. So my dollar exposure is with EU. I don't want to put in another position on USD Swiss. He won't step down. He's stubborn and keeps saying he's not going to. And yes, I hate that guy. He's a weasel. So I guess you're talking about Comrade Kier. But I just don't like him. We're not talking politics here, but I don't think he is good for the UK. FTSE could be on the table for longs if GP high gets priced out. And he's one of the reasons. I mean, he's not like a big reason why I'm bearish on the pound, but he just represents the UK. So he tells me, that situation tells me that the UK is not doing well. The leaders are very incompetent. Which you can make money on. If you can sell the British pound, I think you can make some percentage, some money on that. Need to know Baron's position. Okay, so let's do the giveaway before I forget. Let me grab all of the entries. Today is the 13th of May. So let's see, 13th of May. Okay, nice. We have quite a lot of entries, which is great to see. Let's copy that. Put it in my wheel. Spin. Let's see. So it's going to be Omar. Omar A, congratulations on being the winner. It's going to be a 5K one-phase account. I have your contact information, and after my segment ends, I will send you the code for a free challenge. Okay. I do want to mention once again, if you're looking to get funded, we have a discount code for you, 25% off, DNA funded. The code is A1 Live. Okay, the code is A1 Live. By the way, this is my personal 25K two-phase funded account. I'm down 2%. I'm down $500, trying to get to break even, and then of course trying to get a payout. Had a great experience so far. I've talked to support a couple of times. Everything was quick. The responses were quick. They managed to help me with no issues. They do pay out. So if you want, absolutely give them a look. I think if you're looking at the reliable prop firms, which there is very few out there, DNA is a pretty good option because you get a great price. So FTMO, 5%, or Z8 markets, they are pretty expensive. But here you have a 25% off discount code, A1 Live. So you get a great price and you get a good company as well. Okay. Back to comments. Leon, thank you very much. So I still have 2 more minutes. Let me run through the watch list. So I have 3 positions running. By the way, all 3 positions were signals in the A1 Discord. So Corn, by the way, Corn is Bitcoin. I'm not sure why, but all of the veteran traders call Bitcoin Corn. I think it's pretty funny. So I have a buy position on Corn. I have a buy position on gold. I have a second buy limit at 4581. I have a sell position on EU, betting on a hawkish Fed, and I'm looking to buy equities. I just cannot seem to get a pullback. I think I have the same frustration as pretty much every other investor or trader. The swing traders, at least. Maybe if you're a scalper day trader, you're buying these highs. Personally, I'm looking for pullbacks. So Nikkei, I'm looking for the 60.4K level. Nasdaq, I'm looking for, let's say, 27.8K. Now, don't catch a falling knife. I would not just blindly set a buy limit at 27.8. I would first wait to see how quick is the pullback. If you get a falling knife, there's a high chance it continues down even more. But if you get a slower correction, if you get a slower pullback like this, then it's game on. Then it's pretty high probability to get in. So just monitor the markets. Don't be lazy, but actually put in some time in the charts and monitor what is happening. What of the Nikkei, Marco? So are you asking what is the Nikkei? Nikkei is the Japanese stock market, but the game plan Nikkei is to buy it. It looks absolutely awesome. Looks very bullish. Government is super dovish. Tax cuts are coming. Capital is flowing back into Japan. The Nikkei is beating the S&P. You know what that means? Capital could be actually flowing out of the States and into Japan. Let me show you. See, this is the S&P and this is the Nikkei. And that tells me everything I need to know. Tells me I want to be a buyer in this market. So that's about it. Thank you very much for watching. Don't go anywhere because you have Tiger coming on in 30 seconds. I wish you a great week in the markets, and you can join me tomorrow if you want to participate in our giveaway. So thank you. See you.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, Then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy hump day. I missed you guys yesterday. More onboarding stuff for me. I literally worked 6 a.m. to 10 p.m. So I was whomped yesterday. I missed you. We all have our fixes. We all have our vices. My favorite fix of the day is hanging out with you guys for half an hour, answering questions, and seeing how I can help. So hope you're doing well today. As always, guys, let me know if you have any specific tickers you'd like me to check out. I did have a couple things I wrote down here. I did win on my Aussie CAD trade. That one actually closed out this morning, so we'll take a look at that here in a minute. It's a really good example of patience, okay? Sitting on my hands and not trying to close trades too early just because it stalls. So that one worked out pretty well. Still in that meta trade. It's going a little slow. It's getting lazy. I'm having patience with it too, but I don't know if the patience is going to work. We shall see. Meta's still giving us a really strong look on the stock box. For those of you that don't know, we do have a stock box looking at all the stock tickers as well. Not all of them, but a huge chunk of them. I think there's over 100 or something like that, 120, something like that. But anyway, yeah, we'll check. We'll take a quick peek at that. But the most important thing I wanted to tell you guys today is if you have multiple accounts with TradeLocker, as an example, okay, with Ola Prime, TradeLocker is one of the platforms that we use there, or that they use. I still say we. I'm not there anymore, but that they use. And one of the biggest frustrations I personally had was the fact that I've got multiple TradeLocker accounts. I've got one with Ola Prime. I've got a 100K account with them, challenge account, and I have a 250K challenge account with Top One Trader. So they both use TradeLocker, but the problem is there wasn't one way to seamlessly change from account to account. Well, they have fixed that, ladies and gents. So just for your information, if you happen to have multiple challenge accounts with Ola Prime or anything with TradeLocker, they did add this feature down here to where, so like, for example, this is my Ola Prime account. You can see I'm about 1,900 up on it. You can actually click on a button down here, and now you just simply connect your accounts and you can flip from account to account. Now, this is something that I know a lot of other firms already have. TradeLocker was just lagging. They're one of the newer platforms out there, if you will, but they're my favorite. I freaking love them. So anyway, but yeah, it's just a one click to where you can switch from account to account now. So I thought that was really cool. I wanted to let you guys know that, especially if you are interested in Ola Prime and multiple accounts. As always, Nick does have his 35% code for a discount for the account of your choice there. A1 Live is the code. Once again, got your QR code on the screen if you prefer to whip out the old celly and snap a shot of it. So, and as always, guys, let me know at Trade Like a Tiger on all the socials if you have any specific questions about Ola Prime, prop firms in general. Okay. So yeah, I did, now that I am over here on my account, where I can switch accounts now, the Aussie CAD trade. So yeah, it was, this is the one that hey, look, it literally tests my patience on it because bought into that zone of demand. Remember, on market open Sunday evening here in the States, Monday morning for you across the pond when the FX market opens. But we got that initial spike up, and then it just went back down and kind of recollected itself. This did, and by definition, create a new zone of demand. Just looking at this 1 hour chart right here, this 1 hour candle with obviously the gap, the Sunday gap. Well, that created a brand new zone right here. Okay. So as you can see, we dropped down into that same area, bounced off of that, and that's what pushed us back up. Again, in this area, just lazy. You just never know. You just never know if this stuff's going to flip and take away all your unrealized profits or not. But hey, at the end of the day, I stuck to it. Aussie CAD is our most bullish pair that we have right now. So I finally this morning saw that we did get a take profit. So again, I didn't want to get too greedy on this one because if I flip back over to Trading View with my analysis, just as a reminder, we did have that overhead supply that we had to potentially fight with. Okay, I'll just move that out of the way. Oh, come on now. Get out of my way. Get out of my way. There we go. So this is a 4 hour chart over here. And yeah, I wanted to be out, guys, at the end of the day by the time we came back up to this swing high point from last Friday. Okay. because we got this overhead supply. So I don't want any part of this. Last thing I want to do is hold the trade, and then we go a little deeper, catch a ask, and then just take away all my unrealized profits like that. Okay. So just be aware of that. As always, guys, if you trade supply and demand like me, great. If not, no big deal. Just always be aware of these overhead supplies or underneath demands if you're trying to short. Okay. You gotta pay attention to the big picture on this thing. Okay. And that's what I don't want any part of. So, yep. So we're good to go on that now. Time to go find some new FX trades. So let's see what we got up here. Euro Aussie was a major in your portfolio. Okay. Yeah. I am back. Simo, I'm back. Yeah, it's just been a lot of onboarding with my side projects I've got going on. But we're building a lot of really cool stuff over there. So yeah, more on that to come probably in the future. Euro Aussie, let's take a look at that. Since you brought that up, looks like we've got pretty well a neutral rating. I'm just curious to see, are you shorting that? Are you buying that? What do we got going on? I do have an overhead supply zone on Euro Aussie that I'm keeping my eyes on a 4-hour chart, 4-hour time frame. Very steady series of lower lows, lower highs. The question is this thing getting overextended to the downside at all? Well, we are starting to bounce into a major swing low as we speak. I don't know that I would look at that and say demand zone, because it looks like we have pretty well an efficient market. For a minute, we did have a little bit of demand right here. Let's see if that came into fruition. Okay, that pretty well chewed through that because it's such a strong down move. Daily chart. Yeah, we have inefficiency through here too, even on a daily. So I don't know that I'm that worried about it. Might just take this clear to the bottom. There's no gaps. When I don't see gaps, that means it's an efficient market. See how these wicks all overlay each other or intersect each other? There's no inefficiency there. There's no gap. So I'm not that worried about it. So if you're short in this thing, great. Yeah, if you're short on this thing, great. You might even be able to squeeze a little more out. Let's go look at it again on a 4-hour. Because I don't think I'd be too worried about anything like a 1 hour or lower since it's so far away. This thing was back in early March. Yeah, see, this was a zone of demand for a while, but we can't use it anymore because it got touched. Okay, that was the launch pad, if you will, to the upside. So that's an efficient market even throughout that time frame. Daily, 4-hour. If you're short this thing, hey, take it all the way to the bottom. Why the heck not? Okay, but as always, do your own due diligence on this stuff. Not financial advice, what we have to say all the time, ladies and gents. But if I were short, I probably wouldn't be as worried about that unless we got to the swing low. So still got quite a few pips there, 40, 50 pips runway. But for me, okay, what I would like to do is short this thing, but I just need to push up to a premium zone first. It's too cheap. It's too low. So that would be my play, if and when Edgefinder agrees with us. I would like that. I also like that because we've got some liquidity up here. Okay. So we're talking about buy orders just hanging out up here. You got this swing high, swing high, swing high, and then the dump. So in each case, you had shorts push price down here, shorts push price down here, and then ultimately shorts push price all the way down and broke all these structures. So there's definitely going to be probably some good liquidity up here, guys. So, if I'm trying to short this thing, I love the fact that price has to come up and test that liquidity, because what does a big bank or institution need to fuel a sell order? They need these buy orders. They also need unfilled orders from the supply zone itself. So that would be technically the look I'd be wanting to do if we ever get some agreement out of Edgefinder over here. Euro Aussie, Euro. Yeah, pound Aussie's up there. Where are we at? Where's Euro Aussie? Can't be that far away. Euro Aussie -3. So there you go. So technicals are good. Sentiment is good. It's just the fundamentals. It's the fundamentals that are keeping me from being interested in it right now. Euro Aussie. Let's go look at the Euro map. Remember, the Euro is actually the strong. Oh, look at that. Euro's up to 100% now. Yeah, because previously we had a bearish report for the GDP. And then today we got a neutral rating. So there you go. That wipes it off. That's priced in, ladies and gents. When you see these neutral ratings, that's why we don't include those in on the algorithm. All we care about is, did it beat or did it miss? In this case, the remaining ones beat. So it's 100%. So we got a strong euro. So I don't know. I'd be interested in shorting it right now. And then what was the other one we said? Aussie. Go have a quick look over here. Okay, Aussie's decently strong, 66%. You've had a couple misses, but you've had well, 2/3 have exceeded expectations. So from a short on the euro Aussie, that makes sense. For the Aussie side, it's just the euro side that I'm a little afraid of. It's kind of like the pound. Look at that. The pound and the euro are at 100%. I think that's the first time, guys, that I've seen two assets on here that have been at 100%. Euro 100, pound 100. You still got the yen hanging out at the 75% mark there. We did have PPI data come out for the dollar today, so this ought to change. This should, I think, push it back to the mid-50s because with that PPI, and I don't think it's updated yet. Yeah, the previous reading was bearish. Today's was bullish, right? Bullish for the currency. Talking about this PPI data right here. 0.3%. We had quite the increase. So that's a pretty good beat as far as percentages, as far as, beating forecast. So, good for the dollar, good for the currency as an individual. So yeah, we should see this we should see this go back up in the mid-50s. But it's still overall neutral, guys. And this is the important thing about not getting fixated on just one release, one report. Okay. We don't want to be full partner, taking gigantic trades off of just one good report. This is why Nick devised the Edge Finder, so we can look at everything as an aggregate. And as an aggregate, it's still just pretty well neutral. It just went from, the bottom side of 50 to the top side of 50. So copper, Paul wants to look at copper. Okay, perfect. That's what you're targeting. Yeah, let's take a look at a copper chart. Why not? I'll be honest with you guys. Copper is probably one of the assets I look at the least. In fact, I don't even know what it is. Is it XER USD? Something like that? XCU? I can't even remember what the ticker is. You have to let me know what the ticker is. Sorry about that. That shows you how rare I look at it. I don't even have it saved in my commodities folder. Here, let's just do this. Copper. XCU. Okay, I was close. I knew it had X something. Okay, so over here on a daily, we got our 8 EMA just opening up wide against the 21 EMA on the bottom. That's the alligator's mouth opening up. For context, that obviously means that the trend is in full force as we speak. It's a different story when you start getting the alligator close its mouth. I know this sounds silly, guys, but it's a really good visual. Okay? If you start getting something like that as this comes up, then that's where you got to be a little cautious about the current trend when it starts closing its mouth. I know I drew that horribly, but nevertheless, we're in a strong uptrend right now, technically. Really, really nice, strong uptrend. So let's go back to a 1 chart look. 4-hour chart. See what we got. Okay, so you've obviously got a zone of demand down. Let's see here. I mean, if you're ultra aggressive, you've obviously got this little collection of candles here. Might be one too many candles for my taste. I like to see 3 candles or less in my basing action. And if we're being real with ourselves, that's 1, 2, 3, 4, 5, 6 candles. See, that's way too many candles for my taste. I want the look to look something like this down here. 1 candle or 2 candles if you include the red candle to the left of it, which obviously would encompass it. So that would be a zone I'd be interested in if I were trying to take a long at this thing. Up here, though, again, it's just too much time. That's too much time for an institution to potentially accumulate however much of a position they want before taking off. The reason I only want 1 to 3 candles max is it just gives them less time to accumulate or distribute if you're trying to short, right? If price is rolling over the top, going back to the downside. So it's all about how much time does a bank have to accumulate their position. That's what tells me whether or not a supplier demand zone has some good probability or not so good probability. Okay. So I personally probably wouldn't be that interested in this area, even though the trend is just looking really nice ever since May 4th looks like, so about 9 days worth. You broke all these structure points over here to the left. Okay. That was your first sign that we can go long. Break that structure, and then we kept going. So I'd be interested to see what's our fibs look like. I don't use fibs a lot personally, but it is at your 61.8. Okay. So you got a 61.8 pullback. That would be the long I would be interested in. Plus, it brings you back down to this former resistance, possibly becoming support. Okay, if we do something like this, just connect some of these tops over here to the right, or to the left. Your other left, Tiger. Okay. You got possible support there. And I like when my zones are just a little deeper than the support resistance lines. So in this case, it's the demand zone is a little lower than the resistance, becoming support. Because just by default, guys, when price comes down to this area, by default, you're going to have inevitably every time you're going to have support resistance traders smashing the buy button just because it touches it. So when they do this and buy, okay, they got to put their stop losses somewhere if they're smart. So they're just going to be putting them right underneath. They're going to be putting their stop losses down here. Their stop losses are sell orders since they put in a buy position. So now you got free liquidity down here for the banks and institutions, the big boys, okay, the Wall Streeters, to attack. Liquidity plus liquidity from the unfilled orders from the demand zone. I would look at it a little deeper. Take out their stop losses, come in a little deeper into the demand zone, collect the rest of that liquidity. It's off to the races. That's the way I look at copper. Because the whole game is liquidity. They got to have the liquidity. Okay, they're putting in large, gigantic orders, millions of dollars of orders, maybe billions. Okay, they can't just place a market order. If they do, they're going to get a terrible fill. Price is going to skyrocket, and then they're going to just So they have to mask their orders, guys. They got to hide it. They got to sleuth it. Okay, what a lovely day it is. Absolutely. Obliterated your take profit on Aussie Swiss. Good. There you go. I took my Aussie CAD. You took Aussie Swiss. There we go. Hey, at the end of the day, that Aussie strength came in fruition. The Aussie strength. Now it's not as strong as it was. Remember, this thing was up at the 80% area a while back. Now we're down to 66. So still strong. But now we got a few other currencies ahead of it. So there you go. It's all about euro and pound strength. And then as far as your COT report, be interested to see what we got over here. Okay, this is now 2 weeks in a row, and I know I mentioned this, I think, on Monday, where the Canada dollar was number one. So Canada is getting bought up like crazy. What about euro and pound? Okay, euro actually had a little bit of a sell, about 0.5% net change to the downside. And then your pound was, right there, basically zero. So not really a whole lot. So in other words, not really any help. Nothing to help nor hurt those currencies from the banks, the institutions, the hedge funds, the pension funds, the whales. Okay. So that's a look at that. Let me know some other tickers, guys. Okay, we got dollar CAD from Sabe Longwinya. Yeah, let's have a look at that. Because I was looking at dollar CAD last night, and it looks like it fell off our list. Okay, so it's back to neutral. Back to neutral, +4. So, again, that sentiment's hurting us. Because remember, the CAD is number one in net change to the long side. Dollar had a little bit of a sell-off, best I can remember. Yeah, all the way at the bottom. So this is literally what we're looking at. Everything else is screaming bullish bias, except for what the banks are thinking, what the institutions are thinking. They got rid of 6.5%, guys. So got rid of some longs and added a lot of shorts, 3,600 contracts of shorts. So the dollar was the biggest loser. The Canada dollar was the biggest winner. 7,100 long added, 16,000 short gotten rid of. Okay, closed out or bought to cover. So that's really the only thing keeping us, I think, at the moment from being bullish. I mean, other than that, the fundamentals look great, technicals look great. So let's go have a look at the chart on dollar CAD up here and see what we got. Now, here's the thing with dollar CAD. And even though it's given a little bit of a bullish look to it, I still need at least a day or two, of price action. Because I really, really would rather see, if I were trying to buy this market, okay, I want to see my 8 EMA, which is the dark red. I want to see that above light red, which is the 21. The picture's not there. At this point, the alligator's mouth is closing. Okay, it was a downtrend. We bounced into that underneath demand zone, remember? And that demand zone, the unfilled orders there from there helped to push us back up. Now we've broken some structures, but I'm just not getting that complete picture on the trend side of things. As always, that's the first thing I look at when I look at a chart. I want to see where my relationship is with my moving averages, and obviously verify that we've got higher highs and higher lows. And again, even if we go to to that, let's see here, high. Yeah, okay. So I guess technically we're still kind of in the uptrend as far as swing lows, swing highs. But this right here kind of throws a wrench in a lot of it. So we do have the benefit and the hindsight of knowing that we're bouncing off the daily zone of demand. Okay. And again, the daily is my favorite to look at. So yeah, inevitably, I think we are going to continue the upwards push, especially because we have broken that structure point now. Major one right here. You could use this one over here as well. And in either case, we've broken through. Now, I prefer to get a close above there on a 4-hour chart at least. Right now, we're literally right at that swing high from over here. So open candle. Oh, I'm sorry. I'm looking at the wrong candle. Down here, guys. But in either event, we're still maintaining on a 4-hour chart that series of higher highs and higher lows. So that's a great looking picture from a technical. I just would feel a little more comfortable if we close anywhere above that top white line. And then we would look for our retracement into demand. Now, I had drew up one demand already, and it looks like it's already worked. Okay. And I think this was back when dollar CAD was actually still on our bullish list. So that one's worked. So I can't utilize this. I don't use old zones at all. Got to look for the next freshest one. And I don't see anything in this immediate area. So there's not really any good looking zones of demand here. I'm going to require, me personally, and again, if EdgeFinder gives us a bullish signal again, I'm going to require price to push up and close somewhere up in this area, because you do have a former resistance support line, that blue dash line. I don't know how far back it goes, but it goes back somewhere there. Okay. I would prefer to get a close above it as well. So break and close, and then retrace to a zone of demand. Okay. That's what I'd be looking at. It's incomplete. It's an incomplete picture because these candles are still forming. 30 minutes. Let's see here. Okay, so look, if we get the break and close and we get a retracement, you could squint your eyeballs and look at this 30-minute candle on a smaller time frame, but how many candles are to the left? Too much. Too much, guys. Because if I go back to a 4-hour, this is one big consolidation, one big fair market value, where retail traders, bulls and bears, are temporarily agreeing on price because we don't have anything major moving from that area. It's about 100 pip range. Okay. I want to see a breakout of this, and it would probably draw it up here with the master pattern as well. But yeah, it's not drawn up just yet. But yeah, I need to see a break of this whole entire area. So that's why I drew the line, the projection line coming up here. Get out of this mess, the retail chop fest. Get a bounce. Maybe you pull back at that point. This might be aggressive because it is still within this retail chop fest. This would be a partial position for me. Again, looking at that 30-minute candle, which isn't the greatest look. So I probably would just avoid it altogether. But the reason I even looked at it to begin with is because of all the volume spread analysis activity that took place. Okay, remember, we don't have volume in currencies. We got to get creative. Look at alternative means, tick charts, things of that nature. So volume spread analysis shows me that starting on this green candle, we had a pretty big increase in activity, trading activity, tick activity, or what I like to call institutional activity. So that's that's why I'm interested in that a little bit. But other than that, I think we just need the candles kind of work themselves out and do some more work, because this zone's already taken care of, and there's really nothing in here. I don't like it. I just need price to create a totally new series or a totally new set of demand zones after we break this structure. So that's about the best I got for you on dollar CAD. Hope that helps. But again, we need more information. It's that same boring cliche answer that we give you guys a lot. Need more information. Okay? Got to have it. Got to have some formed candles. Let's see here. Holy cow, I got 3 minutes. As far as alerts I've got going on, I need to check some of these because I've had some alerts hit of late. Euro dollar. So euro dollar, and I think that one might have, did that one fall off the list? Euro dollar, euro dollar, euro dollar. Yeah, I thought I saw it fell off. Well, anyway, technically I was looking at the zone it's bouncing in as we speak because I did like this zone, but we lost it. Hey, look, it's a bummer. Okay. It's a bummer. Again, dollar had good PMI data. So that's dollar strength for the short term, and that's why it got taken off the list. That's why euro dollar longs got taken off the list, because the dollar went from 45% up into the mid 50s. I don't know what the exact calculation is. Okay, so we lost that odds enhancer. And even though the technical still looks sexy, I got to admit, it still looks really good. I don't want to fight the temporary dollar strength that we've got going on right now. I just don't want to do it. But man, does that look good. Woo! That looks good, ladies and gents. I can't even get over it. The volume could have been a little better. The volume spread analysis activity. That's really the only downfall that we had. Because yeah, these candles down here are just tiny. That was the downfall to that. So even if we still had a bullish euro dollar, I probably would still ignore it, because just one time frame, even though the gap and everything looks good on a 4 hour, okay, that looks great. We broke structure. We had a gap. But remember, effort has to match result. That's Wyckoff 101. Okay? Effort did not match result. In other words, if I have a big spike up in candles like I did, I need the volume to confirm that. If the volume's not confirming that, it could be a false move, which means the strength in this zone looks good, but you got to look underneath the layers and see that, it's a little bit on the ugly side. So yeah, even with that, I would probably ignore this, guys. This would have to be a serious confirmation entry, assuming we still had a bullish edge finder signal on this thing. And I would probably even do it on a 4 hour chart. And so far, we haven't gotten an engulfing candle. Yeah, 2 hour, 1 hour. Yeah, none of this. So it's just a no-go. Even with a bullish signal, even with a bullish bias on edge finder, I still would probably ignore that. But anyway, that's euro dollar. What else did I have? Nazi, yeah, still off to Saturn, guys. These things have passed the moon, and they're off to Saturn. Okay, so still need some discounts on these things. Just go back over here real quick to the my CFD list. Before I get up out of here for the day. So yeah, I'm keeping an eye on one zone now. This is S&P. Okay, it's a pretty decent zone of demand right here. But the thing is, we just basically created a double top. So again, I need the break of structure close before I have any interest whatsoever in this zone. That's why I haven't even drawn up an alert yet. This got lazy. This is a little bit of a bummer right here. If we would have had price continue from here and close up here, this would have been a lot more attractive. Fact is, at this point, it's just double topping us. I don't like that. Double tops can often signal a reversal, right? Reversal back to the downside. So I dislike that. Probably going to ignore this. Nasdaq, same thing, except we didn't even get up to make a double top. I mean, we got close, starting to roll over. So I'm not interested in that area. Nasdaq, the Dow, just to finish things up for you guys. We've already had a bounce from the one zone I was looking at on a 2 hour chart. Talking about this candle right here, the skinny one, already had a bounce from it. So this is mitigated. This is old news at this point. Okay. So where's the next zone of demand? It's a lot further down. Right here. Here's our gap showing inefficiency. So that's going to be that's probably going to be the only index look I'm interested in right now, because at least we had a couple really good looking candles come out of that. Three bullish engulfing bullish expanded range candles. Broke structure up here. It's a bummer it didn't really close on this spot. We just kind of wicked in. But the reality is, and I'll end it on this, we did actually get some liquidity here. Those bulls that pushed price up and broke structure, they've got their stop losses somewhere in this general area, okay, which is liquidity that the big banks and institutions, if they're trying to accumulate, can possibly tack on along with the unfilled orders from the zone of demand to take price back and make yet another all-time high. So, ladies and gents, I'll end it on that. I'm going to put an alert on this when I hang up with you. But that's basically it. So I'm out of my FX trade. I'm going to look for another opportunity, see if I can find something for you guys tomorrow. And if I get too bored with Meta, I may just close it out at the end of the week because I don't know. It's still getting a strong bullish signal on the stock box, but oftentimes, when things get that lazy and they just want to go sideways forever, sometimes I'll just close the heck out of it. Might as well free up your capital. This is now over 2 weeks that we've been in this zone. Okay. There is another discount down deeper, and I really need to see it break a structure in the next day or two. Otherwise, I'm probably just going to ignore it. Remember, Meta had strong earnings, and that's why we had this discount to begin with. But yeah, it just got down here and died. So I don't know. It's not like I'm paying a lot on swaps or fees. So I may just hold on to it anyway and see if we can finally start breaking some highs to the upside. Ultimately close out here. So yeah, I think I just talked myself into it. I'll stick with it. I'll let it do its thing. If it stops me out below, so be it. But hey, at the end of the day, we got to have faith. We got to have patience and not close things out premature. Let those runners run. Cut your losses quickly. If you learn one thing from all of us, cut your losses quickly and let runners run. Not the opposite like most retail traders unfortunately do. Ladies and gents, take care. I'm 3 minutes over. They're going to sue me. Have a great day. And we'll be back tomorrow. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. Happy Wednesday, ladies and gentlemen. Let me just move this. There we go. How's everyone doing? Hope you're all well. Hope everyone's off to a good start to the week. So nothing's changed on my end. I'm still sat in gold, which is just an absolute nightmare right now. It's just sideways, nothing going on. Had an absolutely fantastic run initially. Then we came all the way down, and then we came up, and now we're back down again. So nothing for me to really do here at all. It's more just a case of waiting, watching, and letting this trade just play out and see how it goes. Australian dollar Swiss is off to the races, finally out of this horrible sideways range that we've been stuck in. So during this whole period, been collecting some pretty nice swaps, and now we're running to the upside. So again, not really much to say on this one. It's really a case of just letting it go. The only thing I could really say about this is waiting for another 50% retracement and then look for a scale in at some point. But of course, it really depends where the next high will be printed. So at the moment, there's nothing to do. My SSLN position, or my silver position, is rocketed. Absolutely beautiful trade. So I was accumulating, basically bought here and bought a few small positions down here, ended up with a decent average price around 55. And now, yes, again, nice move to the upside. But that's it. My portfolio is pretty empty right now. I'm majority cash. So I'm waiting really for some opportunities in the US market, specifically Nasdaq or the S&P. I think Nasdaq would be my go-to, but either one, whichever one gives me an entry, I'd be happy to go into. But right now, I mean, we discussed this yesterday as well, but there's just not really anything to do here. You know, we've had consistent, extremely strong buying pressure on the US market, specifically again, the not US 30, the S&P and Nasdaq. So us retail traders are kind of just left on the sidelines. I don't really know anyone actually that has managed to catch anything other than a couple of DCA traders that were just buying up. But yeah, it's been pretty tricky, really, just to sit and just watch it rally without you. Oil seems to be climbing back to the upside, which is interesting. Yields are also taking a little bit of a trip to the upside. Nothing dramatic like we had initially, but we are seeing long end yields elevated slightly along with the short end yields. Dollar is strengthening on hotter CPI data, and obviously oil up, so yields up, so dollars up as well. So there's a couple of things going on, but nothing really that drastic to discuss today. So let's just see. I can't stay on for too long today. I do have a meeting I need to get to, so I'll try and keep it short and sweet, and then I will leave you guys to enjoy your day. But let's have a look at what we could be looking for. So the UK has been doing particularly bad. We had a bit of a discussion yesterday about the politics in the UK, so I'm not going to go into that side again today. But we are seeing the sentiment reflected in the pound at the moment. I mean, GBP/USD is down. Euro dollar also is having a bit of a rough time as well. Where's that here? Now, the interesting thing about these two markets is they're sat at the 200 moving averages on the H4, and the RSIs are a little bit oversold. So I would expect a correction back to the upside and then a continuation lower. Very likely, you know, again, it depends on how things go in the Middle East and how things develop. But just for now, the way things currently are, I would expect to pop to the upside, a bit of a pullback, and then continuation lower. In that case, I'd be quite happy to be a seller. There is a pretty nice support level through here that we do need to pay attention to as well. So I can't really do anything until we clear out of this range and we develop a stronger trend in either direction. But yeah, for now, just sitting out, really, just watching. Pound Swiss. Actually, let's just double check. Yes, Pound Swiss is still getting a bearish reading. I really, really like this trade idea on the surface, but as we've discussed, the swaps are awful. So it's definitely not the easiest one to stomach, really. But if I can find somewhere to enter, I will happily go in, very likely at a pretty small position, just to mitigate the fees, at least until the initial position is in profit, and then I can trail stops and then add in as needed. Pound yen, CAD yen, dollar yen also is getting a bearish reading. Dollar yen looked really good yesterday. Actually, I marked it up. I didn't take the trade, but I was really tempted to go into this. So I still view dollar yen as a good buy. We still have the rate advantage in the US. Obviously, you know, we've got yields up as well. The Fed is currently on hold, leaning a little bit hawkish as it seems. So I wouldn't mind being a buyer of dollar yen at some point. I just don't really want to buy it right now. I think it's a little bit late or early, depending on how you look at it. So on a late aspect, we've kind of missed this bullish leg, but on an early aspect, the H4 is still bearish. So there are potential ideas where we actually create a higher high here, come back, retest the previous highs as support. We change trends on the moving averages, and then happy days, we can look to be buyers. That's the plan. We'll see if that happens. I mean, I'm notoriously, oh, don't want to say bad, but the yen is something I do struggle with. I'm very, very honest about that. It's not I don't find it the easiest currency to forecast and trade. So let's take a look at pound yen as well. As I said, the pound is struggling. So pound yen shorts could be in play, but again, same thing really with pound Swiss. It's not really beneficial to be short on the swap side of things. So short positions make sense fundamentally, I think, but yeah, I just don't think it's worth it. I think there's better markets out there to express both ideas of either yen bullishness or pound bearishness. I don't think there's too much else really. We did discuss a lot of it yesterday. Aussie US dollar, I think I've missed that trade. Let's just see. So my watch list still has a few things. I didn't miss Aussie US dollar yet. So with this market, I've been talking about the pullback idea and the fact that we are still very deviated from the 200 moving average on the daily time frame down here. So it just makes me a little bit cautious to be a buyer when we could have a larger pullback to correct, come more towards the 200 moving average, have a bit of a mean reversion, and then a continuation higher. And from my point of view right now, we've got a strong US dollar, we've got a strong Aussie dollar. The Aussie dollar is crowded, stretched. So I'm just a little bit on the sidelines there. I did miss the position on the Aussie CAD, unfortunately. So I had fib low to, the fib drawn from the low to the high, pulled back into the fib zone. I didn't execute. I just didn't notice that this had happened at all. I really need to get in the habit of setting alerts, but I just completely missed this. It is what it is. So completely sat out of this one. Beyond that, euro dollar, as we said, there's not really much I can do here just yet anyway. And the Nikkei. So the Nikkei is probably one of my favorite markets in general, because it's one of those markets where if you get into a good position, it can be a very, very good position. This market has periods where it just rallies. Like, if you look at when it trends and on the pullbacks, rally right here, really smooth, rally right here, really smooth, another rally, really smooth. So if you can just catch one of those rallies, you can have a really good day. So that's what I'm looking for. I'm just waiting for the next pullback, which just doesn't seem to be happening. And I am very cautious again of this sort of left side. I just think this needs to see a bit of a correction into very impulsive, very aggressive. Again, come and meet this 200 moving average, as we spoke about on the Aussie US dollar. So I'm looking for a position around 60,400, but whether we get that or not is obviously a different story. But I am watching that one. Pound Aussie, unfortunately, didn't get this one. So we looked at this one yesterday, and in reality I couldn't really have taken this because it didn't meet my entry criteria of coming into the fib zone. But if I was a bit more lenient and we used the 38.2 and lined it up with the actual previous structure, it was perfect. So I don't really use 38.2. It's not really a part of my strategy. I don't like to add it unless there is a really good reason to. In this case, in hindsight, I probably should have done that. But anyway, we made support, we broke, retested, pulled into the 38.2 and continued lower. So, again, in hindsight, it was a beautiful trade, but I missed it. So that's okay. I'm not that salty about that just because, as I've been saying over the past couple of weeks, I think the Aussie dollar is stretched. It's very, very crowded. And the further it goes, the less it's going to take for it to have a bounce back. So I'm still bullish. Of course, I don't want to sit here saying I'm bearish on the Australian dollar. I'm definitely not, but caution is a big part of it right now. So Swiss franc. Oh wait, that's not. Is that Swiss franc? Was that? Yeah, that's Swiss franc's getting a bullish reading. I don't really have much of an interest. I suppose that could relate quite nicely into the pound Swiss short idea. Yen's getting a bullish reading as well. Euro. So let's just see. Euro New Zealand. I haven't really paid any attention to that market recently. Let's have a little inspection. I don't know about this one. Monthly is extremely bullish. Weekly is also pretty bullish, hanging around the 50 moving average on the weekly. Daily, we've broken below our 50 moving average, but we are still technically in a bullish trend with the moving averages. Seems we've found a little bit of support here as well. So what was it? Bullish? Yes. So it's got a bullish reading. Tricky. So in this case, I can't really do anything because the trend is bearish on the H4, but the edge finder is bullish. So I've got two contradicting signals. So I would need to see this market take a bit of a turn. So break these highs, start pushing higher, creating new highs. And then I would also need to see these moving averages cross into a bullish trend. So that doesn't seem realistic in the short term. It might happen next week, but right now that doesn't seem like it's going to happen anytime soon. So I'm going to put that one on the sidelines. Aussie New Zealand, still, I think it's doing well. I've not looked at this one since I got out of my trade. Oh, that's the wrong market. Hold on. Aussie New Zealand here. So frustrating. So some of you may remember I was in these three positions, got stopped on a trailing stop right here, and now it's rallying again. It is what it is. I mean, what can I do about that? One of those is part of trading, unfortunately, but sad to see. So let's see, what could we potentially do here? If we wanted to get back in, I think it would just be a case of rinse and repeat. So fib from the low to the high, look for a pullback into fib zone, and then a continuation to the upside. I'm still looking for this 1.25. It wouldn't surprise me if that level gets hit. But again, it's really now just a case of, can we get back into this trade? It's frustrating because I really fumbled the bag here. Really fumbled it. But that's okay. It is what it is. Nothing we can do about that now. So we'll let that one go temporarily. CAD yen. I don't know about that one. I'm still not in favor really of being short on these yen pairs. See, with dollar yen, CAD yen, pound yen, I'll be honest, I still see them as a good opportunity to buy low. Of course, that's not financial advice, but if I had to pick a direction, I just don't think I could justify being short. And we do have this left side from the intervention that could do with a correction, and actually this one as well. So that would be my idea, but again, it goes against the edge finder, so I can't do anything. If the edge finder was bullish on these yen pairs, it'd be a pretty simple buy. But again, I don't like to have conflicting things going on. Let's see Bitcoin. Bitcoin seems to be having well, actually, no, not really. So we've been watching Bitcoin for the past couple of weeks, and there's not really that much that's changed. So on the daily, we are seeing rejections of the 200 daily moving average, which is interesting. So I would expect some sort of pullback a little bit further, then a continuation higher. That would be my base case, but it also wouldn't be a massive surprise if we actually continue lower from here, because at this point we were very oversold on the weekly, very oversold on the daily. So this could have just been a reasonable pullback for this market to continue lower. That's what I'm thinking. Volume's not okay? What do you mean? Too loud? Too quiet? Is that why no one's talking about? Have I scared everyone away? Wait, hold on. Let me just check my settings. Oh, maybe it was too loud. I'm not sure. There we go. Maybe that's better. We'll see. But yeah, it wouldn't surprise me if this is just a reasonable pullback. Let some short sellers take some profits, and then short sellers jump back in on this pullback on this daily 200, and we come back towards 60,000. That could absolutely happen. We'll see. Okay, I can probably be another 5 minutes or so, and then I'll have to jump off. But yeah, I think we've kind of covered everything that was on my list to cover. The H4 actually is quite nicely bullish, so we may actually just see the H4 continue this bullish trend and break above the 200 on the daily. That's also another idea. Euro pound. I know we were looking at Euro pound shorts quite a lot. That seems to be out of the window right now. I don't really see that as a fantastic idea. I think the premise is still there. The euro is getting a bullish reading. The UK economy is still struggling. So I do think this is still valid. It's just not as good as it was previously. So I'm going to sit out of this one temporarily. I might come back to it in the coming weeks, and we'll reassess. What else do we have? Was dollar Swiss bullish? Can't remember. It must have dropped off, because I remember we were looking at either dollar CAD or dollar Swiss. No idea which one. I can't remember. It must have been dollar CAD, because we've got this resistance level drawn up. But it's not looking fantastic at the moment. Let's just see what the dollar's doing. The dollar's doing okay. We've still got this gap on the left side on the daily that could do with a correction. So I'm not necessarily bearish dollar right now. Gold seems to be recovering quite well, which is good to see. Actually, I did take some partial profits off gold. So yesterday, I think I showed you guys I was in 3 different positions, or 2 at the time. I can't remember, but I ended up with 3 positions on gold overnight. I ended up cutting some of that quite nicely. So I made a decent profit on gold. I left 1 position running. My average price is here. Actually, I don't know why. It should be higher up there. So I think if we can get another strong lift off on gold, if we can get a push, break these highs, and see a real sustainable move, I wouldn't mind adding in again and start building up another position. I cut yesterday and took some partials because I just wasn't super happy with the inflation print, and the dollar was gaining value, and it just seemed quite unstable. But yeah, we'll see how this develops over the rest of the week, and we might be able to get another nice trade there. As for silver, I would like to start adding in again, but I can't really do it just yet. I'd need to see another pullback, and then I can start adding in more positions. But right now, I'm actually quite satisfied with the way this is, so I've got no reason to do anything else. But yeah, pound Swiss, I think, is probably my go-to at the moment, unfortunately. Yeah, I just don't see anything else. Aussie CAD and Aussie dollar just can't get in right now. Anyway, ladies and gentlemen, I'm going to call it there. I know I've done a significantly shorter segment than I normally would, but I do have some other things I need to attend to. So guys, have a fantastic rest of your days. Stay safe. Don't get margin called. And I'll see you all tomorrow.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.